God. You're live. Everybody's live. That's a little Get Low from the Yin Yang Twins. We haven't heard anything from them in a while. I guess they did that song and then they got out of Dodge. It's very possible that they've done another song. It just wasn't a hit as Get Low was. Anyways, if you're joining me on Instagram, I gave you a little feedback. So unfortunately, fortunately, I had a bicycle accident a couple of days ago, or a day or two ago, whatever. And so I'm moving a little bit slower than normal because of that. It's what it is. So I don't know if you can see it. No, you can't. Well, you can see it outlined here. So my arm from here to here, it's wrapped and it's not good. It's a really bad wound that I ended up getting. It's probably one of the worst accidents. Here's the thing. As much shit that I'm in, as much daredevil stuff that I do, like, this is nothing. This is okay, because I should have been in the hospital with broken bones and limbs, like, monthly. I should be showing up to the hospital with some kind of injury, because I do all kinds of adventurous stuff. My mom and my sister, you're just adventurous. I'm like, okay, we'll go with that. It's a mess. Anyways, we're gonna get into it. So if I'm moving a little robotic today, it's because I got a whole situation going on here that you can't see, but it's pretty gnarly, and so I've had to adjust because I'm dealing with this really bad injury on my arm, and I just hope it's gonna take some time for it to get whole again, but I just hope that it doesn't that the scar isn't too significant, even though it's almost guaranteed it will be, but whatever. So if I'm moving robotic, excuse me. Okay, so listen, I'm having tea today because we're going to talk about real estate and real estate numbers. I just have a simple limited tea. Oh no, I'm doing the Moroccan mint again. I'm sorry. I thought I had Lipton in here. Anyways, I'm doing Moroccan mint according to my little tea handle. So that's a Trader Joe's organic. Really good. LA, homes on the market in the last 7 days. So when I say homes on the market, I'm talking about anything that can be considered a home. So that's mobile homes, townhomes, condos, single family residences, the whole gamut. These are for sale, not for lease. So LA saw about 2,201 home on the market. Orange County saw 882 new homes in the last 7 days, and Riverside County 838. As that compares to last month's, last week's, it's up. it's definitely up. I think LA County had doubled the homes on the market than it had last week. So that's a good sign that the market is essentially trying its very, very best to recover. So let's talk. We don't have a lot of time, but we're going to get into our stories for today's in regards to real estate. So basically today our focus is going to be on new regulations that are being rolled out by Fannie, Freddie, the government. CFPB has rolled out some new regulations. So I'm going to update you on some of the new things that came about in the last, I'm talking about in the last week. So I'm always updating you on what the government's doing as far as, the mortgage crisis, the rental crisis, the COVID crisis, foreclosure crisis is concerned, okay? So let's get on into it, honey. I gotta say, I've been on a few Zoom meetings and I'm talking to lots of folks in LA about what they see coming down the line, and just talking all the time. I feel like I'm like on the I know more than the average realtor, that's for sure. So as much shit as I'm studying and as many conference calls and Zoom meetings that I'm on every week. So it's good to have this knowledge because then I can share it with you all. Okay, so let's get into it. Some juicy stories. So Fannie did roll out a new mortgage refi program. So so this is for Fannie loans only. If you want to know if a home loan is Fannie or Freddie backed, there is a tool that you can go to. Just simply Google Fannie Mae home lookup tool or Freddie Mac home lookup tool, and you can determine by that information if it's a Fannie or Freddie loan. I think somebody's telling me I look great in white. Oh, hi everybody. Thank you. I love the white. This is my puffy shoulders. If you could see my closet, you could see all the costumes that I have. I have a lot of fun clothes because I don't give a damn. So I wear exactly what I like and what I like. And I don't really care what people think because I don't give a damn. So you're going to see me in all kinds of stuff and lots of colors. I love colors. And I also love a straight white and a straight black, honey. All right, so Fannie has rolled out a new tool for refi. So listen to this. This happened June 15th. So you see how fast we are with this. So this is in regards to low to moderate income borrowers, okay? This is for them in particularly, okay? So with rates at the all-time low, it was an excellent time for homeowners to refi. But here's the thing. You have to meet certain criteria to refi a loan. You just can't knock on their door, your mortgage's door, and say, I want to refi my loan. It's kind of like applying for a mortgage all over again. They take your current paycheck stubs, your bank statements, they look at your payment history, they do a full-on underwriting to ensure that you qualify for refi. So there's a lot of people that don't qualify and we're not able to take advantage of the low interest rates that we're experiencing. So Fannie has, the government is trying to make things easier without doing a full-on bailout to landlords, because our banks, right? Banks first, landlords second, and homeowners, they don't really care about. So lenders do impose really tight credit restrictions when you do their refi. So they do look at all of that stuff. So that means that a bunch of folks that have homes don't have the opportunity to refi. Well, okay, so with that in mind, the FHFA, which is the Federal Housing Finance Agency, the one I quote so many times, has announced in April that it would have a new refi option for low-income borrowers with mortgages that are backed by Fannie and Freddie. Okay, so Fannie has its own, and then Freddie has their own. So don't ever think Fannie and Freddie are two entities that are the same. They are government-backed, but they do things a little differently, but they always try to be in line with each other. So you want to make sure if it's Fannie or Freddie backed, right? Okay, so Freddie's version of this program is going to be rolled out, and it's called the Refi Possible program, and that's going to launch in August. So August 30th, the last day of August, they're going to launch that program. So look out for Freddie's program to come out. So FHFA estimates that the borrower can take advantage of this new refi option, and they're supposed to be able to save between $150 and $350 per month on their mortgage. So that's good. It's a little bit of a discount. So what they say for this refi option is designated to help eligible homeowners who have not already refinanced save between $1,200 and $3,000 per year on their mortgage, which is pretty decent. I know a couple of people that utilize the refinance program early COVID, and so they are saving a significant amount of money per month, and they are happy as clams. I gotta tell you that much. The properties that are not, so if there's a property that is not eligible for the appraisal waiver, the program offers a $500 credit on appraisal fees. Because when you refi your property, it gets reappraised, okay? Some of them are waived depending on the loan and who backs the loan. Some of them are not waived the appraisal. So they have to do a new appraisal on your property. Doesn't mean that necessarily you have to go in and walk your property to see what you've upgraded. They're just gonna check comps in the area. I mean, that's pretty much what they're going to do. So the program also let borrowers with balances of less than $300,000. So if you have a balance of less than $300,000, Fannie and Freddie of the adverse market refinance fee that Fannie and Freddie imposed last year, the new program helps spread the refi savings and mainly benefit financially stable homeowners. So they're not doing it for folks that are in trouble necessarily, but they're doing it for those who are financially stable, because essentially they don't want to lose the property. Not all lenders are going to participate in these new programs, so you have to check with your particular lender if they participate in the Fannie Freddie rollout refi programs. Okay, so just like HAMP, there was a complete confusion on who actually is doing the lending or who will lend, right? So many borrowers will apply with their lender. They've just been jerked around and they weren't really able to get anywhere with their lender. This is going to make it more streamlined, which is very important, because that's a big issue with lenders and homeowners today, is that nothing's streamlined. I can get into that for an hour. So in order to qualify for this new Fannie and of course the Freddie program that's rolling out in August, here's some of the qualifications that you have to have, okay? The mortgage has to be backed by Fannie and Freddie. There's no ifs, and what's, buts about it. It's a Fannie and Freddie program only. And it's for one single unit property or a condo slash townhome, okay? So if it's your second home, your investment home, it's not eligible. Don't even ask them. You have to make 80% or less of your area's median income. Okay, there's a Fannie Freddie tool that you can check to see if you income qualify. If you want that information, send me an email and I'll send you the link. How about that? My email is not on here, but my phone number is. So I'm matthews.katrina@gmail.com. Again, Matthews, 2 T's, 1 S, .katrina@gmail. Also, my email address should be in my Facebook main page. The other qualification is you couldn't have missed a payment in the last 6 months. So these aren't for folks who are behind in their mortgage. These are folks just trying to restructure their mortgage, okay? And you could, for borrowers, you can have no more than one missed payment in the last year. So within 6 months, you had to pay on time, but in the last entire year, you couldn't have missed more than one payment in order to qualify. You also have to have a loan to value ratio of 97% or less, a debt to income ratio of 65% or less, and your FICO needs to be higher than 620 in order to qualify. So if you know somebody, a parent or a neighbor or a friend who has a property currently and has not done anything with their property, they haven't refi, they haven't taken advantage of the situation or the current economy or any of the programs that are being rolled out, this might be something for them to look at. Again, the goal is to help them save about up to $300 per month on their mortgage, and they have to have a balance of less than $300,000. So this is not for new homeowners. This is for folks who've owned their house for some years now and they just haven't done anything. So we want them to be able to take advantage of these government programs that have been rolled out. So feel free to give me a call. I will hook you up with a lender who is going to be able to walk them through the steps and get their application filled out. And it's super easy. Like my family member who refied did it fairly quickly and was able to get a really, really awesome interest rate and a pretty good monthly payment. That's saving that person a lot of money. So that's what's going on with that. So you know that the foreclosure, the big F word, has been looming over our heads for some time now. It's a hot mess. Everybody's wondering, will the market tip or fall? We just saw that story come out 2 days ago where they said that the stories about folks exiting the state of California and a huge exodus is actually not true. There's no data to back up the fact that people are moving the hell out of California. Not anything significant. So people are always moving around, right? Everybody moves around and people always move in and out of California, but there's just not enough data to say that there's a huge exodus. So that's thing number one, which is a good thing for people who own property in the state of California. It's still going to be California rich. It's still the best. It's not really a kept secret now, but it's still one of the best kept secrets on the face of the planet is our wonderful state of California, which I love so much. So the Consumer Financial Protection Bureau, say that 10 times fast, has announced that they will start allowing foreclosures. Okay, this was inevitable. We knew this was coming. There's no way around it. You're going to have to figure out what's going on with your mortgage, get it rectified with your lender, or sell your property. There's no in between. There's no just sitting around. I would hope that if you have trouble with your mortgage, or you have a family, friend, neighbor, whomever who has issues with their mortgage, they're not just sitting there thinking that there's going to be a rainbow one day and things are going to get better. It doesn't work like that. So here we go, foreclosures, okay? So in the past month, the CFPB, the Consumer Financial Protection Bureau, has been projecting the foreclosure tsunami. We keep hearing that word, the big F word, as approximately 5% of homeowners who were in forbearance in the last 6 months will be exiting forbearance. So here we go. Those who applied for forbearance, it was only a temporary solution. It wasn't something that was going to be sustainable. Obviously, now it's time to pay the piper. Sorry, but it is. So they will start allowing foreclosures again, and this is going to happen real soon, but there's going to be a few conditions. So they did finalize their amendments to the federal mortgage servicing regulations to enforce the ongoing economic recovery as the federal foreclosure moratorium are phased out, which will help protect homeowners and borrowers from unwelcome surprises as they exit forbearance. As the nation shifts because of the COVID-19 relief packages, they can't be complacent and close their eyes to the danger that's looming. They have to address it, and they're addressing it now. So for homeowners exiting the forbearance programs, they will have time to make a decision that fits their family needs. Whatever their family needs are, they want to give them options, okay? So generally speaking, borrowers have at least 3 options to bring their mortgage current or to be foreclosed on, okay? So the goal is to help you avoid foreclosure. I never want to see a person who is foreclosed on, because it can be 100% prevented. And there's so many options. You can prevent foreclosure, and you do not want to get a foreclosure on your record, because it sticks with you for like 10 years. You can't rent, you can't buy, you can't even rent a car. I mean, if you have security clearance at your job, you might lose your security clearance because now you have a foreclosure on your record. Like, it haunts you like just the disgusting ex-person that you dated who won't leave you the hell alone, who texts you at 12 o'clock in the morning, but I won't mention who that person is. Okay, so The options is you can resume regular monthly payments, right? So you're exiting the forbearance program, so you can go back and start paying your mortgage, okay? Servicers can move borrowers' missed payments to the end of the mortgage. This is commonly known as a deferral, okay? This is when they take the chunk of money that you owe and they move it to the end of the loan. So essentially, this is including the fees. So this is not just your mortgage payment, but this is your mortgage payment plus all of the arrear late fees that you have accumulated while you were in forbearance and not paying your mortgage. Okay, so they can take all that chunk, move it to the end of the loan. So when you do sell your property, your escrow will have to pay that entire amount off. So that will be your new payoff. The second thing they can do is they can lower your monthly payments. So this just depends on your financial situation, your hardship, whether or not they will be able to do sort of like a refi, but they actually are not refining, but they are taking your mortgage amount and they're adjusting it so that it's doable, it's payable. Okay, so that's one thing that they can do. The other option is that homeowners can sell their home. For homeowners, a significant equity. If you have a lot of equity in your house, a sale might be possible. It might be the best option. However, long-term forbearance will significantly erode borrowers' equity, and home prices may dip if the market continues with these horrible home sales. Okay, so there's a lot of moving parts here that we have to address, but my suggestion is it's case by case basis. We have no idea what's going to happen to whatever borrower. Even if you're with the same servicer, you might have a different outcome than somebody else because your situation is different. You guys don't have the same income, you don't have the same hardship, you know, things are different. So it remains in some cases, foreclosure is avoidable. So under the new CFPB rule, foreclosures foreclosures will be able to start if the borrower, okay, so here we go. So if I'm going to name off a few things, and if these fit you, then you probably are first in line to get your house foreclosed on. There's a good chance that you may be foreclosed on. That's a huge thing, by the way, abandonment. That's huge with servicers. So you may not want to just leave the property and give up on it. And this is in any state, not just in California. I'm talking about any state. You don't want to just leave a property. Don't do that. Contact a real estate professional, an attorney, and have them help you out. So don't abandon. If there was more than 120 days behind in your mortgage before March 1st of last year, so if you were in trouble prior to the pandemic of last year by 120 days, you're probably going to be foreclosed on. You're probably first in line to get your property taken from you. It's what it is. If you're 120 days or more behind on your mortgage, and you haven't been speaking with your servicer, again, 120 days more off on your mortgage, and you have not been in communication with your servicer, you're probably in line for foreclosure. If you have evaluated all your options and there was no other option but foreclosure, then you're probably in line for foreclosure. So again, the number is 120 days. So if you're 120 days late on your mortgage, you need to raise your hand and you need to call somebody so that you can start looking at options. And the big thing with me is to present you with the options that are available to you, and then you choose what's right for your family, and then you carry on. Okay, so there's a lot of moving parts, like I said, with that, but it's absolutely doable. But foreclosures are coming, and here they come. You do not have to get foreclosed on. If you have an issue with your mortgage, and you're listening to me, and you can hear the sound of my voice, and you're having an issue, whatever little issue or however big or small, and you haven't called me, then I don't know what to tell you. I really don't. Like, we can only help you so much. We can only help the folks that raise their hand, right? Ooh. So let's get into the falsifying of owner occupancy. So this happens when you purchase a house and you tell, and on your loan document, you signed off certifying that you are going to live in the property unless you're purchasing it for income property. If you're saying this is going to be the residence or the place that I live in, and you end up not moving into it and you end up renting it out, guess what? You have created mortgage fraud. This is more for investors. Investors pull this shit. Normal mom and pop buying a house, they don't have issues with it sometimes. But investors do pull this shit. Okay, so here's what happens. If you're a real estate agent and you, first of all, have a really good relationship with your mortgage lender, find a mortgage lender that you work really well with and have a good relationship with them. Because if they see red flags on your client's mortgage application, if your lender isn't telling you about this, you probably need to get a new lender. I don't play games with my lenders. If I see that my lenders are effing up in any way and it might come back to me, the blowback might hit me, guess what? You're not my lender anymore. I ain't got time for that shit. Do your due diligence, do your work, do what you're supposed to do, and raise your hand if you see a big issue. So, because you know what, as an agent, you got a license that is at state, and you don't want your license to become an issue, right? So let me tell you a little bit about how this works, okay? So according to, so there was a press release back in January 14th, I believe it was, and it was in regards to home loans. And so Fannie Mae limited the secondary market portfolio by, and it's only 7% of these types of loans. So these are your residential 1 to 4 units, investment properties, and second home mortgage applications. Okay, so this is all the same. Here's the issue. If I buy a house and I get a co-borrower and that co-borrower is not occupying the house, for instance, I want to buy a house and I want my friend Jessica to also go on the loan with me in order to buy the house. However, Jessica is stating in the mortgage information that she will not be occupying the house with me. Guess what? That raises a red flag with the mortgagors, because they want to see that all borrowers that are applying to borrow on this home loan are going to be in the house. It's a weird situation, but they're going to look at you a little bit closer because they want to make sure that there's no mortgage fraud that's being created. So buyers currently, if you're looking to buy a house, you can add an extra 2 days onto your loan application period prior to you getting full loan approval, because underwriting is taking a little bit deeper look at the loan process because of mortgage fraud. You saw my video the other day. Mortgage fraud is up by 20-something%, 27%. It's ridiculous. So they're doing a deeper dive into the underwriting process, and they're ensuring that there is no mortgage fraud being created, okay? So these are for applications and transactions involving non-occupying co-borrowers and buyers who are receiving large gift funds. You're gonna get extra scrutinized. So if you're trying to buy a house and you're using gift funds from a person and it's a very large deposit, those are red flags in the underwriting process with your mortgager. They just are. Okay, it's very poor, because listen, defrauding Fannie, Freddie, HUD, or the government, those are all felonies, my dear. You can't be defrauding the government. Those are felonies. You don't want to get caught up in that. So being found guilty of housing fraud for profit is a very quick trip to the big house. So here's proof of occupancy. Here's how to recognize agents or clients. Here's how they're recognizing if you're committing fraud. Listen to these circumstances that they're scrutinizing. Now get out of here, because it looks like I'm overtime again. If you have a second home, if you're a buyer and you own a second home already, and the second home is nicer and bigger and in the same general area, your loan application will get scrutinized a little bit harder, because they're wondering, why the hell are you buying a second home when you have this big, beautiful, fabulous home over here, and you're buying this other home and you're supposedly gonna live in this other home, supposedly? Red flag. Obviously you're buying it to rent it out. You're not owner occupying it. So any kind of letters of explanations, yeah, they don't help. You can write a letter to your lender and say, well, I'm doing this because of that. They don't care about that. They're going to look, and they're going to look with their own eyes, and they're going to make sure that they have all the necessary information in their books before they approve your loan. The proximity to your employment. If you're buying a house, say in San Diego, and you work at LAX, and you said that you're going to occupy the home in San Diego, that is a red flag. You're probably not. You're probably buying the San Diego home so you can rent it out. So stop lying and saying that you're not. Sorry, not sorry. So the buyers who are claiming they're gonna work remotely, Kat, what do you say about that? I'm buying a home in San Diego, and I do work at LAX, but now because of COVID, we can work remotely. Well, they're still gonna scrutinize it. They're going to call your employer. They do it twice. Once when you get into escrow with your property, and the second time prior to closing escrow, they're going to look at that information. They're going to look at your employment to make sure you're still employed there, and you would have to get a letter from your employer saying that your company, your division, and you personally can indeed work from home. You can work remotely. So you have to provide that to your lender when you do a home loan. Okay, so again, I am not an attorney. I would highly suggest, if you have any questions in regards to mortgage fraud or anything like that, contact an attorney. Go ahead and call them. If you have any questions in regards to mortgages, I have lenders that I work with. Be happy to send you over to one of my lenders, and it does not cost to talk. It never costs to talk to us. You can call me. You got my number. It's back here. You can call, you can text, you can send an email and say, I just have this very simple question. If I can't answer it and it's a lender question, I will get you to a lender who will call you the next day, and they can get an answer. If it's early enough in the day, they'll call you the same day. It's some very simple stuff. Okay. So listen, that is it for Real Estate Tea today. Lots of different regulations are being rolled out. They are trying to combat the issues that are going on with COVID in our economy. As you can see, Fannie and Freddie and the CFPB have rolled out tons of regulations. A lot of them are to help the homeowner, but listen, they do have big banks that have a lot of money, and they are actually providing a lot of resources, and unfortunately, to the government. It's all politics. And that's why we will see foreclosures essentially happening, okay? So it's not going to be too much of a difference. All right, so thank you for joining me. I really appreciate it. Had a good time. Listen, I will be back next week unless there's something weird that goes on. Let's see what is going on with Kat other than my arm that is in rehab right now. I have an arm in rehab. But yes, feel free to give me a jingle, 310-617-3411. If you have any questions about anything that I spoke about this evening, feel free to call me. I have a new listing coming up. We have a couple of listings, actually. We have a lot of listings in the popper. One that's getting ready to pop, and I will tell you all about it. That listing is in Lawndale. If you have any buyers, it's a 3-2, about 1,200 square feet on a little bit more than a 4,000 square foot lot. It is adjacent to the 405 freeway, so it's close enough but far enough. It's really nice. The backyard is killer. I think the backyard is going to be the reason why this house flies off the market, and it has a designated laundry room, which a lot of people don't have. I think it's wonderful. If you have any questions, please feel free to give me a call, 310-617-3411. I'm going to leave you with the caveat. All right. Thanks for joining. We will see you next Sunday. Thanks. Raise your thumbs in the air. Bye, guys.